this trade deal, the markets liked it. I don't want to call it a deal. I shouldn't call it a deal.
No, you shouldn't call it a deal.
This trade softening.
What do we call it? It's not even an agreement, I don't think yet, right? It's really just was just a conversation, although the markets loved it on Friday. They loved it Thursday, loved it Friday coming into the weekend, just because the market's aching for some news. But was this really news? And I think what's going to happen today.
The market thought it was.
Well, the market thought it was on Thursday and Friday. The way that they sold it, Trump came out and sold it as if the deal was basically done. In fact, over the weekend, as people start to kind of analyze it, tear it apart and look at it and try to understand what it really is, what is it really? And I guess that's the converation now. So you've had a lot of back and forth.
Answer your own question then, Mr. Boston. What is it really?
So it's not a trade agreement at all. Listen, they talked about China buying more agriculture products. Okay, great. They've been talking about that all along.
Soybeans are going to save
soybeans and pork. Listen, they got the big swine flu over there in China. They need our pork, right? So is that really such a big deal? I don't think so. The currency deal was reached back in February 2019 with Steve Mnuchin. He talked about that since February. Was that really a big deal? And you can't tell me, and the market is now not believing that they solved anything over intellectual property or intellectual property rights.
Or rare earth minerals,
Or rare earth minerals. They didn't, over lunch and dinner in 2 days, they didn't solve that problem, even though Trump made it sound like we've got all this working on the table.
It's something, right? I mean, it's something.
It is something.
Feast or famine, and it's been famine. And maybe it's not a feast, but it's a scrap. It's a nugget.
It is, but I think what you're going to see is the algos took the market 3.5% in 2 days. Yeah. And so you could very easily see it give it all back, especially this week. You're going to start with earnings.
Yeah, we had a guy, we have the smartest viewers, by the way, of any network. And some guy said, why is the market doing that? I said, it's computers, not people. Let's move on, Kenny, to another pressing topic. Yep. Okay, I want to talk about earnings. Earnings season, hard to believe, it happens every 3 months. Gets underway in earnest tomorrow. It's a big bank week, literally. JP Morgan, Citi, Wells Fargo, Goldman Sachs, also Johnson & Johnson, United Airlines. By the way, you're welcome, United. Now, earnings expectations are not high. Analysts predicting S&P 500 earnings to drop for the first time in more than 3 years, but they're still not terrible. What's the expectation from how you see it?
So the expectations are not going to be as bad as I think that they suspect they're going to be. Look, even last quarter, they were supposed to be down. They weren't down nearly as bad. By the end of the reporting season, the earnings were not down as bad as the original expectation. I think you're going to see that again. I think what you have to worry about, though, is, listen, earnings is history. It's already happened. What you really have to pay attention to is what they say going forward. And with still so much uncertainty over trade, there's going to still be a lot of kind of concern, people hedging themselves. Look what happened to Delta Airlines last week, right? They reported they beat on the bottom line, but yet their guidance going forward was below what the street expects, and right away the algos weren't happy with it.
But think about this: if you're a big bank and you're so concerned about the yields, right? Yield, the spread, all the other things. And guess what? There's probably a lot of people, these banks, who thought we'd be at 3% in the 10-year by now.
We're not.
We're at 1.55 during the quarter. Right. We're up above that right now.
Right.
But when it comes to spreads and yields and NIM, net interest margin, the banks have got to be a little spooked.
And so I think that's what you're going to hear this week, and that's what investors are going to be paying attention to, exactly what that means now going forward.
And what do you think it means going forward?
So I actually think that financials are going to struggle a little bit. I think the market's going to struggle a little bit. I think we're at the
highs. We end the year lower than we are now?
No, I think we're going to end the year I think we're actually going to end the year right around here, but I think we're going to back off. And as we move into the fourth quarter and holiday shopping season and all that, I think you're going to get that typical boost that you get in the last quarter of the year. But I think the market's going to end right about around 3,000.